Afternoon right here on ET Now. I'm Ashesh and the big story today, of course, came in from the RBI MPC, which has announced a 25 basis point rate cut with the repo rate now standing at 5.25%. Remember, RBI also raised FY26 guidance when it comes to, or rather the forecast when it comes to GDP, and they've inflation estimates for the full year based on macroeconomic developments that we have seen this year so far. And after that announcement came in, Nifty has inched higher. In fact, it is now nearing that 26,200 mark on the Nifty. Banking and financial services stocks continue to do well. We have Nifty Bank that continues to stage a gain of nearly 460 points as we speak to trade near that 59,750 mark. So several individual stocks continue to remain in focus from the BFSI space. We have Shriram Finance, Bajaj Finance and Bajaj Finserv, all of them gaining in excess of 2.5% on the back of this announcement that came in, and all these three stocks are also the biggest gainers on the Nifty 50 index. But MPC's 25 basis point rate cut will ease EMIs, improve affordability and lift demand in housing, autos, MSMEs and consumer sectors. Let's get in Raghav, my colleague, to break down how the real estate rate cut reshapes sectoral outlook, which sectors stand to gain and which sectors stand to lose on account of this rate cut. Raghav, over to you.
Absolutely, Ashisha. I mean, the impact of the RBI's 25 basis rate cut will have on a lot of wider sectors. When we are talking about housing and real estate, it's going to have a positive impact for sure, as lower EMIs will be unlocked for new home buyers, and anybody looking out for a home, buying a home at this point, it's a good time to go ahead. Second sector that's going to be impacted positively is going to be automobile sector, as EMIs again will be lower for this particular, these purchases for the consumers, and better financing will be unlocked for the consumers. In terms of MSMEs and SMEs, they will also be impacted positively, as cheaper credit will now be accessed by the consumers, and faster growth potentials will be unlocked by these rate cuts. In terms of the bank sector, there we're going to be seeing a mixed response because near-term margin compressions are expected. But one thing's for sure is that deposit repricing will be experiencing certain form of reliefs. In terms of NBFCs, again, there will be a mixed response because lowering consumers will be experiencing lower borrowings at this point. In terms of agriculture, Shisha, I believe there is going to be a positive response in terms of this particular industry, as enhanced credit access with KCC will be accessed by farmers in this particular sector. Even consumer durables at this point will be positively impacted, as higher disposable income for consumers will be unlocked by these rate cuts. In terms of consumer discretionary products, they will also be positively impacted because people will have more funds in their hand to go ahead and invest in their own things. When it comes to infrastructure, I believe it's going to be positively impacted again, as cheaper capital for new projects will be unlocked by these rate cuts. When speaking about insurance is going to have a mixed response because premium affordability will be improved for consumers, but net impact will be seen in the coming foreseeable future. Speaking about retail and e-commerce, that's going to be a positive for sure for this economy, for this particular sector, because increased consumer spending, again, anywhere consumer spending where it's involved, we're going to be seeing a positive move. In terms of tourism and hospitality, again, that's another sector that's going to see a positive move because of these rate cuts. Writ large, in terms of speaking, the impact of these rate cuts on larger sectors, there is going to be a positive impact for sure. The GST push, the rationalization, all of that, along with that, these rate cuts are going to have an impact for sure, a positive one.
Okay, so several sectors tend to positively be impacted on account of the rate cut that has come in. Raghav, thanks so much for joining us with all those details.